Hello, according to Kambo here, welcome to the channel. And in today's video, we're going to discuss how you as an individual can buy shares in Kenya. And of course, I think this is information that a lot of people don't know about. And for me, I've done this and I've purchased a few shares. And I think I have some experience that I can share with you guys. So, normally, before you buy shares, you need to understand the idea of Nairobi Stock Exchange. And essentially, what it is it's a market where companies go there, they list their shares with intention of one, raising capital, and you as an investor can go there and buy shares, right? So essentially, companies like Safaricom, for example, they go there, they list, they get enlisted in the NSC, and then investors can contribute by buying their shares, and then that capital can then be invested in other places. For example, I think a few years ago, Safaricom ventured into Ethiopia. That's a new market because Safaricom has dominated in the Kenyan market, and so it was exploring new markets, and it went to Ethiopia as a new market, right? And the only way it can do that, one of the ways it can, raise capital to go to new markets is through the Nairobi Stock Exchange, because Safaricom is a publicly listed company, right? And so when you buy shares, um, Safaricom collects capital in form of that, and then it gets invested. And in the end, what it does is, you who has bought the shares can then be a shareholder, right? That means that you have a section, you own some shares and you own a piece of the company. So when the company makes profits, that means that you will be a part of the shareholders who are going to receive profits, right? So let's go through the advantages of owning shares, right? And of course, one of the advantages is the idea of making money passively, right? Imagine you owning shares in a certain company in the NSE, right? In Kenya, right? And so because now you see there are different types of shares. There are those shares where if you own, then you have to make decisions. You have voting rights, in that shareholders meeting of the company, right? But normally those shares that are publicly traded, you don't have any voting rights. That means that you don't make decisions in the company, right? So your job is just to relax as and wait for the company to make profits, because there are people who have their who own shares which actually have voting rights, and they can make decisions on behalf of the company and on behalf of other shareholders who don't have voting rights. And so if these people make decisions and make good decisions, definitely, and the company makes profit in the end, then all shareholders are entitled to profits, right? And that includes you who own shares but does not have any voting rights. And so that is the idea of passive income, right? That's money that comes in without you actively working for it, right? And another advantage is the advantage of making profit as a result of your shares going, the price of your shares going up, right? Let's say you bought a share. I think Safaricom shares was like 25 currently, or like 25 currently, right? At this time, 2025. So if you buy 1,000 Safaricom shares, you'll spend like 25,000 Kenyan shillings, right? That's if one share is 25 shillings, right? And then maybe after 3 months or after 6 months, you find that the share price has increased and has risen to probably 30, right? That means that you've made 5 shillings profit per share. And so that's one of the advantages. That's how you can make money through your shares, apart from just dividends, which you can get to make money passively. And the only way you can profit that way is by selling off your shares. If you sell out your shares, that means that you can now get the 5 shillings that is on top as profit, right? And so one was the dividends, which is you can make passively, and then two is by selling your shares, right? Uh, and that is only when the share price goes up. And then now let's come to the disadvantages of actually owning shares. So one of the disadvantage is the idea that your shares can lose value, because now you've bought these shares, right? You've bought the shares, and so it's not guaranteed that your shares are going to gain in profit, are going to gain in profits, right? It's not guaranteed that the company is going to make profits. The company could actually make losses, and you could lose money in the process, because if the company is not profitable enough, then the share price of the company comes down. And what happens to you who had initially bought the shares? The share price of your shares goes down. So if it was Safaricom, which is 25 per share, which were 25 per share, and then the share price goes to 20, that means that you've lost 5 shillings per share, right? And now that's one of the risks, because there is no guarantee. But if you find that if that company you're investing in, let's say you've done your research properly, and things go your way, right? And now the company is profitable, definitely you're going to make profit. So another disadvantage is the idea of time. You see, it can take a long time for you to make profits, right? And for if you're not willing to wait, then definitely I don't think shares is a good investment for you. Because I think I remember in a few years ago, I think in 2020 or 2022, yeah, I think 2021, yeah, I think Safaricom share price was 45, right? And then it came down to about 20 per share. And so if you had gotten in at 20, that is in 2022, so you'll, and right now the share price is 25, right? So if you had gotten in at 20 and you expect that probably after 6 months, maybe the share prices will go back to 45, which was its all-time high, I think, then you by now you would not have achieved that objective, because now, I mean, shares take time. It needs a lot of patience. Sometimes you can wait for 10 years before the share price its previous all-time high. So it's all about patience. And I think that's a disadvantage, because if you need quick money, probably maybe you can look for a different investment that's not holding shares. And so for now, I'm going to take you through what you need to know before you actually get into shares, right? And first of all, I'm going to take you through the Nairobi Stock Exchange, what you need to understand, and of course, the procedure on what you need to do to purchase your shares if it's your first time, right? So if you come to NSC, if you search NSC here, you find the Nairobi Securities Exchange. Yeah, you click on it. Then you come to regulations, and then now you can see the list of issuers. List of issuers is literally the list of companies which are listed here, and they're actually the companies that you can purchase their shares. So you find that in agriculture we have got this Kakuzi, Limuru, there are Rivi Pingo, Sasini, you know. And then you find that there are different categories of companies. For example, here there's automobiles and accessories, there's banking. If you click here, I think you'll see equity. Equity is also one of them. Standard Chartered Bank. What else? Absa Bank, I&M Bank. Then there's commercial, construction and allied, energy and petroleum, insurance, investment. So these are the companies that you can actually purchase their shares. You can just go there, pick and buy any of their shares, right? So it's up to you. You are going to like do your own research and choose which particular share you're going to buy, right? So there are a lot of companies here listed. Yeah, and right on top here you can see the share prices. But what you actually need first is you need to create a CDSC account, right? CSDC account, sorry. And uh if you come to regulations again and you go to trading participants here, you're going to see listed. So these are listed brokers. So essentially, when you need to buy shares, you need to go through a broker, right? Because I think brokers they act like as an intermediary between you and the Nairobi Stock Exchange. So you need to go through a broker. And I think it's as a result of us not most people not having a lot of capital. That's why we go through brokers, right? Because brokers they sort of handle in large scale, and so they can brokerage it down to us, uh, where we can purchase with the small amounts of money, right? And so if you come here, you can see there are different brokers which are listed here. For me, I think I use Equity. Yeah, Equity Bank is here. I am also seeing NCB is here, also KCB Bank is here, and also AMSA is here. Looks like most of the major banks in Kenya are here. So essentially, you're supposed to visit their broker, create an account with them, and then they are going to create a CDSD account for you. And then now, how it happens is that you have your bank account, right? For example, in Equity. So I'm going to just speak of Equity because that's what I've used before. So you find that you have your Equity bank account, and then now you have your brokerage account, right? CDSD account, right? So you find that you deposit money in your account, your bank account, and then you are supposed to place orders. It can either be a buy order or a sell order. So a buy order is the order that you make when you want to purchase, purchase shares. So you go there, you say, I want to purchase Safaricom shares worth this amount. And now, whenever the market opens, now they can bid, the stock can bid on a behalf. And then now the order can go through. And next time you want to sell again, you come, you go there, you place a sell order. Although I hear that there are some brokers right now who offer online trading. I don't think Equity does that for now, but I think there are other stock brokers who offer online trading. So essentially, what it means is that you can actually just visit their website and uh, log in and register. Of course, register and log in, and then create an account, and then you can trade from the comfort of your home, right? And I think that comes with an advantage because now you don't have to always go to the stockbroker to you know physically and always put orders. What it does is that you now get the freedom to execute orders right from your comfort zone, right? So I think you can research on that if you want to venture into that. Yeah, but essentially that's how it works. So you just make sure that your broker is listed here so that you don't get conned, right? Ensure that it's listed here. That means these companies that are listed here, the brokers that are listed here, are actually uh, under regulation by the CBK, right? The Central Bank Promotion, yeah, and the NSC rules. So essentially, you have to go through the broker and purchase, and so you'll be monitoring after you've purchased. Then you'll always have to keep monitoring if the share prices goes up and down. And now, if let's say, for example, you've bought at 20 and you want to sell when the share prices reaches that, right? So you'll always have to check if the share prices hits your target, then you go place a sell order, right? And that's how you make your profits. Or you can hold long term and then make money through dividends. So dividends is literally the profits made by a company, right? And then they are distributed as per the percentages of shares that you own on that company. Yeah, so basically that was the whole point of the video, and I think I hope you've gained some value from this video, and if you've done so, If you gained the value and you like the video, please leave a like. Also, smash the subscribe button, subscribe to the channel, and of course, I'll be happy to. And also, leave your comments in the comment section, and I'll be happy to respond. And see you in the next one. Bye.